A skeptical man would say this, that America has just voted for a lot more of the same, a lot more printing money, a lot more overspending. What do you say?
Well, if that's the case, we've seen a fantastic recovery in the stock market over the last 4 years. You got to put it in perspective. Just recently, we were up at the highest levels in the S&P since 2007. So if it's the same with the with the president and the Senate and the House of Representatives, if it's the same path, it's been a very powerful move higher.
But will it be the same, sir? Because of course, massive overspending and printing money cannot go on forever.
No, it can't go on forever. And I think people are mischaracterizing the move that we're seeing in the markets today. You're seeing some profit taking. Let's remember that the stock market was up 1% yesterday. We're down 2% today. Yesterday, we were 13.5% higher on the year to date in the S&P. So it's a little bit of a, buy the rumor, sell the fact type information. But actually what's driven this market lower is Europe. We're paying attention to the European situation once again instead of focusing on the election. And as you stated, Europe was down 1.5% overnight. That's really what's dragged the stock market back down and pushed shares lower. And I don't think it has anything to do with the election except for maybe profit taking.
Economic history tells us that countries that are massively over-indebted often prefer inflation to repayment to sort out their problems. Do you see that being a problem here in the United States?
We've been talking about inflation for many years now, and it has not become an issue. Actually, we were, sometimes some people could view it in a deflationary environment. Everything in the States has gotten cheaper until just very recently. Houses obviously had been continuing down. Cars, vacations, clothes, appliances, TVs, everything's been going down in price. We've seen a little bit of a bounce in some commodities, but commodities are still significant. They're at their year lows right now, and they're significantly lower than they were at the peak of 2009. So I don't think inflation is the issue. And if you look at the fundamentals, I think right now it's hard for partisans to separate the issues and look at this as traders. We're not Democrats, we're not Republicans, we're capitalists. We're going to make money wherever that opportunity is. And if you look at the fundamentals, America is still the best performing stock market in the world, and we've got the best record corporate earnings better than they were in 2008, the best they've ever been, low interest rates, no inflation. So the fundamentals are still very solid for performance here in the United States.
What about the gold price? That's the one commodity you didn't mention. Its price is way, way higher than it was in 2009. And many people would infer from that people in the market do fear inflation. Gold's the natural hedge.
Well, gold is now viewed as another currency. I think because of the European situation and the euro now dipping down below 128 again, we're at 2-month lows in the euro. Let's talk about the dollar. Everybody talks about, and you alluded to, the dollar printing, the printing of money. Well, what's interesting is the dollar right now has shown strength because of the European crisis. I don't think it's sustainable. We are in a 25-year downtrend in the dollar. We've had a little bit of a bounce. We're at 2-month highs in the dollar. We're around the 81 level. And what that means is that we're 14% above where we were in the dollar in 2008. Most people aren't aware of that relationship. The dollar is much stronger now than it was in 2008, even though the talk is that the dollar is weakening. That's not the case. And when the dollar weakens more, that's going to support dollar-denominated assets like crude oil and gold. And I'm looking for gold to push $1,800 an ounce one more time. I think gold is an alternative to currency, and people have driven all the currencies around the world. There's been a chase to the bottom in all the currencies.